Gold has been the undisputed champion of wealth preservation for over 5,000 years, with a staggering market cap of $17.6 trillion today. But what if I told you that Bitcoin, the 15-year-old digital upstart, currently worth just $1.8 trillion, is on track to dethrone gold as the ultimate store of value? Here's the shocking part. Bitcoin's price has skyrocketed over 44,000% in the last decade, while gold has barely doubled in value. Institutional giants like BlackRock and even entire countries like El Salvador are betting big on Bitcoin, calling it digital gold. Welcome to Satoshi Finance, where we break down complex finance topics to educate and empower you on your journey to financial freedom. In this video, we'll answer 3 critical questions. Why is Bitcoin compared to gold as a store of value? What factors could drive Bitcoin to surpass gold's market cap? How realistic is it for Bitcoin to truly overtake gold? Stick around as we explore why Bitcoin could spark one of the greatest financial shifts of our lifetime. Gold has long been celebrated as the ultimate store of value, cherished by civilizations for thousands of years. Its scarcity, durability, and universal acceptance as a medium of exchange have made it a cornerstone of wealth preservation. Gold's intrinsic value lies in its physical properties. It is rare, does not corrode, and has a wide array of uses in industries like electronics and jewelry. These attributes, combined with its historical significance, have cemented its reputation as a hedge against economic uncertainty and inflation. Bitcoin is increasingly referred to as digital gold because it mirrors many of gold's attributes in a modern digital format. Like gold, Bitcoin is scarce, with a hard cap of 21 million coins, ensuring that no more can ever be created. Its durability is guaranteed by blockchain technology, which records and verifies transactions on an immutable decentralized ledger. Bitcoin's growing global acceptance, especially as a hedge against inflation and currency instability, further strengthens the comparison. But Bitcoin doesn't just replicate gold's properties, it surpasses them in several ways. It is far more portable, allowing for near instantaneous global transfers without the need for intermediaries. Bitcoin is also highly divisible, with each unit capable of being broken down into 100 million smaller units, satoshis, making it practical for both large and small transactions. Unlike gold, which requires physical inspection to verify authenticity, Bitcoin transactions are digitally verified, ensuring trust and security. As the digital age evolves, Bitcoin's advantages position it as the next evolution of the ultimate store of value. Bitcoin's divisibility gives it a significant advantage over physical gold when it comes to practicality in everyday transactions. While gold can be melted and divided into smaller pieces, this process is costly, inefficient, and impractical for most users. Bitcoin, on the other hand, is divisible down to 100 million smaller units known as satoshis. This level of divisibility makes Bitcoin far more versatile, enabling it to be used for both microtransactions and large-scale transfers with ease. Whether someone wants to transfer the equivalent of a few cents or millions of dollars, Bitcoin accommodates both seamlessly without the need for any physical manipulation. Portability is another area where Bitcoin outshines gold. Transporting physical gold across borders involves logistical challenges, high costs, and often legal hurdles. In contrast, Bitcoin is entirely digital and can be transferred globally in minutes, regardless of the amount or destination. This makes it ideal for a world that is becoming increasingly interconnected. Additionally, Bitcoin's verifiability eliminates the need for physical inspection to determine authenticity or ownership. Blockchain technology ensures that every transaction is recorded and immutable, providing instant proof of ownership and validity. Unlike gold, which requires expertise and equipment to confirm its purity, Bitcoin's authenticity is guaranteed by the network, making it far more efficient and reliable for modern financial needs. If you've made it this far, consider taking a moment to subscribe to our channel. Subscribing is absolutely free, and you can always change your mind. We have a wealth of financial insights and exciting discussions lined up for you. Your support not only helps us reach a broader audience, but also motivates us to continue creating high-quality content that educates and empowers viewers like you. So, hit that subscribe button, stay tuned, and join us on this journey towards financial empowerment. Thank you for being a part of our community. One of the key factors driving Bitcoin's potential to overtake gold in market cap is the growing institutional adoption of the cryptocurrency. Major firms such as MicroStrategy, BlackRock, and Fidelity have significantly increased their investments in Bitcoin, signaling a shift in perception among traditional financial institutions. These companies view Bitcoin as a hedge against inflation and currency devaluation, similar to how gold has been used historically. At the beginning of this year, BlackRock launched its Bitcoin ETF, which has already become the most successful ETF in history. This monumental achievement has opened the floodgates for trillions of dollars in investments from both retail and institutional investors, further cementing Bitcoin's legitimacy and credibility in the global financial system. Mainstream acceptance of Bitcoin is another critical factor propelling its rise. Countries like El Salvador have already adopted Bitcoin as legal tender, allowing it to be used for everyday transactions alongside their national currency. This move has sparked interest from other nations, particularly those facing economic instability or hyperinflation, as Bitcoin offers a decentralized alternative to traditional fiat systems. As more countries and businesses integrate Bitcoin into their economies, its utility and demand are likely to grow exponentially. This expanding adoption, coupled with Bitcoin's finite supply, could create the perfect conditions for its market cap to surge past gold's in the coming years. The narrative of Bitcoin as an inflation hedge is becoming increasingly compelling in a world where rising global inflation is eroding the value of traditional currencies. Gold has long been considered a safe haven during times of economic uncertainty, but Bitcoin offers a modern alternative with unique advantages. Unlike fiat currencies that can be printed at will, Bitcoin's supply is capped at 21 million coins, making it inherently deflationary. This fixed supply, combined with growing demand, has positioned Bitcoin as a viable store of value in an era where central banks continue to expand money supplies. As investors seek refuge from inflationary pressures, Bitcoin's digital scarcity and global accessibility are attracting more attention as a hedge against economic instability. Younger generations, particularly millennials and Gen Z, are also playing a significant role in Bitcoin's rise. Unlike their predecessors, these generations have grown up in a digital-first world, where technology drives innovation and convenience. For them, digital assets like Bitcoin are more relatable and accessible than traditional stores of value like gold. Bitcoin's ease of use, combined with its potential for high returns, resonates deeply with younger investors who prioritize technology-driven solutions over tangible assets. As wealth transfers to these tech-savvy generations in the coming decades, their preference for Bitcoin over gold could drive a massive shift in demand, further solidifying Bitcoin's position as the asset of choice for the future. The current gap between Bitcoin and gold's market cap may seem daunting, with gold standing at $17.6 trillion and Bitcoin at $1.8 trillion. For Bitcoin to surpass gold, it would require nearly a 10x increase in market cap. While this may appear ambitious, Bitcoin's historical performance suggests it is far from impossible. Over the past decade, Bitcoin has demonstrated exponential growth, with its price increasing from mere cents to tens of thousands of dollars, vastly outpacing gold's relatively stagnant growth. This rapid trajectory, combined with Bitcoin's fixed supply and increasing demand, makes the idea of reaching gold's market cap more plausible as adoption continues to grow. Several factors could accelerate this shift. Economic instability, such as hyperinflation or banking crises, often pushes investors towards alternative assets, and Bitcoin's decentralized nature makes it an attractive safe haven. Furthermore, demographic and technological trends may lead to a decline in gold demand. Younger, tech-savvy generations increasingly prefer digital assets like Bitcoin over traditional stores of value like gold, while technological advancements reduce gold's industrial importance. As these trends continue to unfold, the conditions for Bitcoin to match or surpass gold's market cap could become a reality within the coming decades. Bitcoin's future growth is underpinned by several key catalysts that could significantly boost its market cap. One of the most prominent drivers is the Bitcoin halving event, which occurred this year in April. During halving events, the reward for mining new Bitcoin is cut in half, effectively reducing the rate at which new coins are introduced into circulation. This built-in mechanism creates a supply shock, often leading to increased demand and higher prices. Historically, post-halving periods have been followed by substantial price surges, and many are now watching closely for signs of another bullish cycle that could propel Bitcoin's value closer to gold's market cap. Additionally, technological advancements like the expansion of the Lightning Network are enhancing Bitcoin's scalability and usability. The Lightning Network allows for faster, cheaper transactions, making Bitcoin more practical for everyday use and expanding its appeal beyond just a store of value. Another major growth catalyst is the potential for regulatory clarity. As governments and financial institutions develop more comprehensive frameworks for cryptocurrencies, large-scale investors who were previously hesitant may finally enter the market. This influx of institutional capital could dramatically increase Bitcoin's market cap, solidifying its position as a mainstream asset and further closing the gap with gold. In conclusion, while Bitcoin's market cap still lags far behind gold's, the factors driving its growth present a compelling case for it to not only catch up, but potentially surpass gold in the future. Bitcoin's digital scarcity, coupled with growing institutional adoption, mainstream acceptance, and its appeal as a hedge against inflation, sets the stage for continued upward momentum. The advantages Bitcoin holds over gold, such as divisibility, portability, and verifiability, make it more adaptable to the needs of the modern world. Combined with catalysts like halving events, advancements in scalability through the Lightning Network, and the prospect of clearer regulations, Bitcoin is primed for explosive growth. As the global financial landscape continues to evolve, Bitcoin's role as a decentralized, borderless asset may soon prove too powerful to ignore. While reaching or surpassing gold's market cap is no small feat, the trajectory Bitcoin is on suggests that it is more than just a possibility, it could very well become a reality. For those watching from the sidelines, now may be the time to reconsider what the future of wealth preservation truly looks like. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to our channel for more insightful content, and hit that notification bell so you never miss an update. Thanks again for watching, and I'll catch you in the next video.